The handouts that I'm going to give you guys, or I'm going to send you guys on the Google Classroom in a few minutes, they actually go into the nitty gritty of it, like which one does certain things, okay? And we'll try to go through those and talk about them, make sure you understand them before I turn you loose on that. But anyway, talking about the role of financial markets and financial institutions. A financial institution, guys, is anything that can hold money for you, okay? And they can hold money for you in a lot of different ways. So hopefully this will make some sense once we get through it, okay? There's about 8 slides, okay? So first thing we're going to talk about is what a financial market is, okay? So it says financial markets bring together people who have money to lend and are willing to take risk to earn a return with people who want to borrow for a specific purpose. So that sounds very complicated. First thing I would do underneath financial institutions, write down financial market. And we're going to put this in our own words. Financial markets. So basically, if you read that again, it says it brings together people who have money to lend and are willing to take a risk with people who want to borrow for a specific purpose. So basically, any type of financial market is when people are willing to loan money to other individuals. Okay? So beside the financial markets, put down it's people who are willing to loan money to other individuals. Now, you know as well as I do, the people that are giving out the loans, they are going to want those loans paid back, and they're probably going to charge people what on those loans? Interest. They're going to make them pay a little bit more back to make a little money on what they had to borrow, right? Now, the second part of that, it says financial institutions act as intermediaries. You guys know what an intermediary is? You ever heard the slogan, the middleman? They're the middlemen, okay? You can go to a financial institution, they'll let you borrow money, they'll charge you interest, and then you make payments to somebody else. You understand what I mean? But they interact with borrowers and savers in a financial market. So, beside of financial institutions, we're going to write down the word intermediary, but just know that it means middlemen, and it's up there on the board. But a financial institution is an intermediary. Okay? By interacting with borrowers, meaning people who want to borrow money, and people who want to save money. Okay? So you can go to a financial institution to borrow money from them. You can go to a financial institution to put your money with them and they'll save it for you. Okay? So that's kind of what we're going to start talking about today. Okay? The questions that we're going to try to answer is we're going to figure out what a financial institution is. There's a lot of different ones. What are the benefits of having financial institutions in an economy? What are some types? We're going to talk about types of them today. How do they channel funds to borrowers and savers? And then what is the government's role in all this? So a lot of neat stuff. This deals with money. This will pertain to you your entire life. You guys understand? So it's important that you get to know this and have an idea of how this works. Okay? So first question is very simple. What is a financial institution? Simple enough. Right underneath where you put intermediaries acting with borrowers and savers, I would put down this definition, that they provide financial products and services to consumers. Financial institutions, and that's that definition that I'm going to ask you on a test. If I want you to tell me what a financial institution is, I want you to say that it provides financial, what's the word financial mean? Just means it's dealing with what?
Money.
Money. Provides financial products. Now you may not understand what it means by products because there's a lot of different ways a lot of different things you can do with money. You can put them in stocks. You can put them in savings accounts. You can put them in high interest CDs. You can put them in a lot of things to try to make your money grow. But they provide financial products and services to consumers, so to people like you and I. Could they also do all this for businesses as well? When these financial institutions hold money for businesses too? Yeah. All right. So, like I said, financial institutions provide financial products. Emphasis on financial products. Okay? And services to consumers. So far, so easy. Makes sense. All right. It says, what are the benefits of having these? Okay, it says financial institutions provide products like checking and other accounts to help consumers manage money. So, in my notes, I'm going to write down the word benefits. I'm going to draw a line under it. Then I'm going to list the benefits that financial institutions give us. Okay? Okay? The first one I'm going to write down that's a benefit for a financial institution is they help manage our money. So help manage money. Now let's talk a little bit about that. When you get older and your job and you have your career, you're going to be making more money than you've ever made before, right? Now, some of you are going to have families with children. Some of you may be single till you're 50. Who knows, right? But you're going to want to try to set yourself up for later in life with the money that you're making now. Okay? So, more than likely, you're going to have a checking account. And the money that you put into a checking account is your everyday money that you could use to spend on whatever it is you may need. You guys have seen debit cards before, right? You got to have the money in the checking account to back up the debit card. All right? You may also want to start a savings fund. You may want to put money back, maybe saving up for something that you want to do later in life. You may want to invest some of your money into stocks. You may want to put some of your money into high interest CDs, which is the same thing as a savings account, but you're not allowed to touch that money for a certain period of time. Does that make sense? So there's a lot of different things that they help manage your money with, and they try to get you on the right track to benefit from it later in life. Okay? The next thing it says is they provide services and advice to help consumers meet their financial goals. So I'd put down number 2. Give advice. To reach financial goals. Some of you guys may want to buy a house and pay it off in 10 years instead of 30. You can go talk to a financial advisor and they can help you figure out how to do that. Okay? So they give advice into how to reach their goals. Okay? Another benefit, the third one, and again guys, all these are important. Okay? Another benefit that financial institutions provide is it says they have a safe place for individuals to hold money. So put down a safe place to hold money. You don't hear many bank robberies anymore, do you? Security, okay? And the internet, or not the internet, but technology has helped a tremendous amount with that, okay? And then the last thing it says, they channel money from savers to borrowers. And we're going to talk a little bit, go into detail about that. So a benefit, but now they channel money. From savers to borrowers. Okay? Now, let me try to make you guys understand how banks and credit unions and or basically just any type of financial institution does this. Let's just take one of our banks that we have here in town, the bank of, Grayson National. Okay? Let's say that I have a savings account set up at Grayson National and I've got, $5,000 in it. Y'all with me? And Jace goes in there one day because he wants a loan to buy a dirt bike. And the loan he wants to take out's $1,000. Okay? Now, do you all think the bank is going to give Jace $1,000 of their money?
No, they take it out of people's.
No, they're going to take it out of each, a little bit out of people's savings here and there. And then they're going to give him that money and they're going to charge him what when he starts to pay it back? Interest on it. Y'all with me on that? So at the end of the day, when Jace pays all that money back, instead of just giving the bank $1,000, he's going to pay them, say $1,200. Okay? Well, they're going to put all that money back that they took out of people's savings accounts, and then the bank will pocket $200. Y'all see how that works? And that's how they make money. That's how they continuously make money. So, does that mean if I have $5,000 in my savings account and they give Jace $500 of it, and I roll into the bank right after Jace, can they still give me my $5,000? Yeah, they're just going to take a little bit of money out of somebody else's. Y'all see how that goes? Now, all this works as long as everyone doesn't roll in and take money all at the same time, right? Because if everybody were, and that won't ever happen, but if it were to, the banks would be in a bind, right? So that's kind of how they channel money back and forth between savers and borrowers. They take a little bit of everybody's, give it to them, and they hope that that individual has to pay interest back. That way the bank makes money and people get to keep their money, right? Very simple, very easy, okay? So far, so good? All right, next part. What are some types of financial institutions? And this is where we're going to stop and look at something else. So write the word down, types of institutions. Now, obviously, this isn't all of them, but this is some of them, okay? So the first one we got here, obviously, is a bank. Second one we have is called a credit union. And we're going to talk about what each of these are here in a second. So you may want to leave yourself some room so we can write out what they do. Okay? Insurance companies. All are examples. Now, can you guys think of another example of another type of financial institution? What do y'all think? Anybody? Open, please. Okay, so people online aren't going to be able to see this, but you guys are going to be getting it in your classrooms, and guys that's listening, you'll be getting it in your Google Classroom a little bit later today. But we're going to talk about some of these and make sure you understand them, okay? So we're going to jot them down. Now, obviously, I did not write down on your paper every type of financial service that there is, okay? Because if I did that, it would be impossible. We'd be filling up everything, okay? So just to give you an idea, so you know I'm not telling you a fib, it says financial institutions are the types of businesses that provide services to help people manage their money. Emphasis, first thing we wrote underneath benefit up there was what does a financial institution do? Help manage money, okay? The financial industry in the U.S. is complex and includes many kinds of institutions, including banks, credit unions, savings and loans, and financial technology companies that provide a wide variety of services for the general public. If you notice, we put all three of those down at the bottom, right? All right, so here's what we're going to do. We're going to fill in basically what these things are, okay? So we're going to start with a bank. I can't highlight, so do you guys see where it's right there starts? So underneath bank, or beside of bank, I want you to put down that it is a for-profit company. So are they trying to make money? Yes. A bank is a for-profit company. Okay? They are licensed and they are headquartered by the federal government. Okay, so they're a for-profit company that's basically ran by the federal government. Okay? A for-profit company that is ran by the federal government. And we'll talk about all the things they do right here in a second, okay? The next one is a credit union. It says credit unions are similar to banks, except they are non-profit organizations owned by the members who use their services. All right, so very simple. Underneath credit union, just to give you a broad definition, put same as bank. So with that being said, let's back up a little bit. Can I go into a bank today and ask them for a loan? Yes or no?
Yeah.
Yeah. And they're going to make me go through a whole process, and they may approve it or deny it. Don't know yet. Can I go into a credit union and ask for a loan? Yes, I can. Remember, it's the same thing as a bank. Y'all with me? So the only difference being is that it's a non-profit organization. So write down non-profit. Now, here's what you need to understand about the difference between a bank and a credit union. And we need to jot this down, okay? If I go into a bank and want a loan, I'm looking at something long-term, like over years. Does that make sense? Like I'm trying to pay something off and it's going to take me years to do it, like financing a home or possibly financing a car. Something that I'm going to spend a lot of time making a payment on. So underneath bank, write down the words long-term loans. And that's how banks make money on loans, is interest over long periods of time. Y'all understand that? Now, a credit union is not that way. A credit union is something similar to me going and borrowing money, and I'll have it paid off in 6 months or 3 months, okay? They'll give me $1,000 and say, you've got 90 days to get it back to us. Y'all with me? So, underneath credit union, put down short-term loans. Okay? Short-term loans. Then it says savings and loans specialize in saving accounts and home mortgages and other loans with special limitations that banks do not have. All right. Now I did not put savings and loans up here, but we can add it. Just skip over insurance companies right now and add savings and loans. And just basically put down savings accounts. So they'll hold my money for me and probably pay me an interest rate on it. Y'all with me? give me like 2% annual interest. So when I have $100, if I leave it all in there, I'll have 102 at the end of the year. See what I'm getting at? Savings and loans also deals with mortgages. You guys know what a mortgage is, right? Can somebody tell me what a mortgage is? It's your house payment when you buy a home, and you make your mortgage payment every month. It's where you live, okay? Now banks deal with that too, but they put savings and loans put limits that banks do not have, okay? But we'll just leave it like it is, okay? So what we're going to do, guys, what I'm going to try to attempt to do here is we're going to basically go through each of these that I've showed you, a bank, a credit union, and then talk about why you should choose certain ones. We're actually going to do this paper, you're going to fill it out, and then I'm going to go over it with you to see if you can understand it, okay? But let's start back up here with a bank. It says a bank can offer customers checking and saving accounts that are insured by the federal government. We know that. That's where we keep most of our money, okay? We wrote down long-term loans. We can do mortgages through a bank. We can do credit cards through a bank. And we can retire and invest through a bank, okay? It says the interest rate charged on loans is lower than that charged by payday lenders, and customers can develop a financial history. So, still go back under bank. Now, everything so far that you should have underneath a bank is this. For-profit company, they're ran by the federal government, and they offer long-term loans. Has everybody got that for what a bank does? All right. Now, we can also put down that they deal with mortgages, you can also develop credit cards from a bank, and you can have investment accounts with a bank. So there's not a lot of things you can't do through your banks. Now, some banks don't offer certain things. Like I know for a while it took one of the banks here in town forever to develop a debit card. Everybody was using a debit card, but they didn't have one. Well, they eventually done it, okay? It says usually banks will only cash checks for customers who have an account. Makes sense. You have an account there, they trust you. And banks may not offer small or short-term loans. They don't offer them because you have other unions that do. There are credit and background checks for loans, so the money may not be available immediately. All this stuff is how it works, okay? So, a bank, basically you can do any type of credit you want to, or any type of banking you want to do when it comes to money, okay? Pretty simple. Now, if you look at the credit and unions part of it, we already said that they are non-profit, right? We should have non-profit, short-term loans. That's all there, okay? Now, it says most credit unions offer the same services as banks, including checking and saving accounts that are insured by the federal government. Home mortgages, credit cards, you can do all that. You can actually get a long-term rate through credit unions. I wrote down short-term because I wanted you to know the difference, okay? But you can do long-term. Where am I at? I've lost my place.
Just reading over what we had in credit unions.
No, I'm trying to find the difference. Rate charge on loans is also lower than payday. Okay, so basically the biggest difference is the short-term, long-term roles. Okay, so this part is the one I want us to try. It says, which institution would you choose? It says, read the question that your team has been assigned. We're all a team here. Decide which of the 4 financial institutions described in part 1. Bank. We're going to go with bank or credit union. We're not going to use the other 2. Would best provide the services you need. Okay, so basically, guys, where can I go to cash a check if I don't have a checking account? Now, what this is referring to, let me go back up here so this isn't confusing and talk a little bit about this. we wrote down banks and credit unions. It's a check cashing store, allows customers to cash checks. Okay, send money to people if they need it. Okay, you can buy money orders, which are prepaid documents and other checks, and used for making payments. Identification card is the only requirement to obtain these services. Okay, so we can jot this down, and we probably need to, simply because you need to understand the difference. So somewhere on that paper that you have, write down check cashing stores. And common sense will kick in at some point. When it comes to check cashing stores, it says, what do they normally do? Literally, it says it in their name. What are they going to do to a check?
Cash it.
They're going to cash checks. Okay? It says that you can send wire transfers, which means money. You can send money from one institution to another. You can purchase money orders, which is prepaid paper documents other than checks used for making payments. A money order, guys, is good to have if you're mailing off a payment. You guys understand that? Like, some people don't like putting a check in an envelope because it has your account number on it. And if the wrong person were to get a hold of that, they could clear out your banking account. So a lot of people will go write a check or give money to someone who can give them a money order. And a money order is verifying that you paid whatever the bill is, and that piece of paper that they put it on is worth what that bill is worth. So you turn it into a bank, they give you the money for it, but it doesn't have your account number on it. Y'all with me? So underneath check cashing stores, right down, you can buy money orders or just money orders. All it says you need is an ID to obtain these services, and there is usually no credit check or background. Fees for services are generally higher. So put down fees are higher at one of these places, because you're not going to be borrowing money from them. The only way that they can make money is to charge higher fees. Y'all with me there? And they're usually higher than what you would get at a bank or a credit union. Okay? The other one that we need to jot down, I don't know why I wrote down insurance company, but I like it thinking, I guess. Put down payday loan store. Common sense again, a payday loan store sounds like something you could go get a loan until what? Payday, right? So, it says payday loan stores offer customers loans for small amounts of money that must be repaid by the borrower's next payday. So, write down loans that are paid back by next payday. So you're looking at a loan that's no more than a month. You got me? Most people get paid once a month, or within a month. Most people get paid. Says there's usually no credit background checks. However, borrowers must be 18. That's usually how it works. You need proof of employment. So you got to jot that down, proof of employment. Because if they're going to give you a loan and suspect you to pay it back by your next payday, they're going to have proof that you have a what?
Job.
You better have a job, right? It says the interest rates charged on a loan may be really, really, really high. They charge really high interest rates because they're only giving it to you for a couple of weeks. You know what I mean? And if a borrower does not have enough money to pay off the loan by the next payday, they will need to take out another loan. So you can see how you get in trouble with that, right? You better be able to pay it off if you're going to do it. Now that we've talked about banks, credit unions, check cashing stores, and payday loan stores, let's look at what I was initially wanting to show you. So here's what I would like for you to do. Actually, let's just do this together. It says, where can I go to cash a check if I don't have a checking account? Of those four options that we talked about, a bank, a credit union, a check cashing store, or a payday loan store, which one could we go get a check cashed if I don't have an account in it?
Cash.
Yeah, cash checking store. Pretty simple, right? They'll cash it for me. Okay? Now, they may charge me a little bit of higher fee, but at least I can get my check cashed, right? Number 2, where can I go to develop financial history without being a member owner of a financial institution? So where could I go to try to get some type of history built, some type of credit history built, where I don't have to be a member of it?
Credit union.
That would be a credit union, exactly. A bank, you're going to fill out, have an account, you're going to have all this stuff. A credit union offers the same thing as a bank, but you don't have to be a member of it. You understand what I mean? A bank, you're usually a member of. The third one, it says, where might I have to pay interest over 300% for a short-term loan? Who's going to charge me a really big, high interest rate on a loan that I'm going to have for a week or two?
Bank.
No. What's it say about a payday? Look right here. Payday. The interest rate charged on a loan may be 300 or 400%, far greater than that charged by banks or credit unions. Why do you think they charge such a high rate? You got to think. They're not going.
It's only for a couple of weeks.
Yeah, they're giving you a loan for 14 days, right? So they're trying to make as much money as they can in 14 days. A bank can make it over 30 years. You know what I'm getting at? So that would be a payday loan store. Where can I go to develop a financial history and be a member? Common sense. If I want to develop financial history and be a member of something, which one of those 4 would work? A bank, yeah, a bank. Where can I go to cash a check without needing a credit background check? Well, I'm going to need a background check at a bank and a credit union because that's what they normally do because they're very similar. So a check cashing store isn't going to do that. Where can I safely save my money knowing that it is insured by the federal government if the financial institution fails?
Bank.
The bank, good. Where can I get a long-term home or auto loan?
Bank.
Bank. Where can I get a loan immediately?
Payday loan store.
Yeah, a payday loan store. I can get one pretty quick. I just got to have proof of employment. And where would I pay the highest fees to purchase a money order? That would be a check cashing store because they're one of the few people that still offer those. Okay? So does everybody have somewhat of an idea about how these work, these different types of credit unions? All right, let's go back and finish the notes that we had right here. So those are some of the types, and I bet we're going to talk about what they do. So how do financial institutions channel funds from borrowers to savers? So what I'm getting at is how would a financial institution get money to a borrower and take it from a saver? And what I mean by taking it is they're not literally taking it from a saver. It's just they're taking little pieces of it, giving it to somebody else, and then they're just going to put it back once they make their money, right? So first thing, it says financial institutions attract funds from savers by offering interest rates on savings. So let's jot down incentive. Put down the word incentives in your notes. We're going to write down incentives. To save money. Incentives to save money. Okay? So, what does a financial institution, one that will allow you to save money, what type of incentive, what type of behavior are they going to offer you for you to want to save your money with them? What are they going to pay you on your savings if you put your money with them? An interest, right? Now look, y'all got to understand something. Interest goes both ways. Interest can be good and interest can be bad. Interest being good is when I have a savings account or something of that nature that a bank or a credit union will give me money for keeping it with them. Y'all with me? If you can get a 3 or 4% interest rate on a savings account, that means if you don't touch that money, they're going to give you a little bit back annually to help you grow. Now, it's not going to grow fast. Remember us showing you the chart about different investments and how the investments can take off because they're more risk, but a savings account just kind of has steady growth. Y'all remember me showing you that? Well, that's what a bank offers you. They're going to offer you interest to keep your money with them. Now, obviously, you're going to want to put that money into a savings account that has the highest or lowest interest on it. What do y'all think? Talk to me, guys. I know it's Friday and this is new, but a savings account, I'm going to want to keep it with a bank that offers the highest or the lowest interest on a savings account.
Highest.
The highest. I want to make that money. Now, if I got to borrow money from a bank,
You want the lowest.
I want the lowest interest rate possible because that's what I'm going to have to pay back. Y'all with me? So, an incentive to save money, put down that they offer interest rates on savings. So, offer interest rates. I can't spell. Offer interest rates on savings accounts. Okay? They offer interest rates on savings accounts. Now, it says financial institutions use deposit savings to earn income by lending to borrowers or investing in other financial products. Okay, so basically, we've talked about this. If I need to borrow money, they're not just going to give me their money. They're going to take a little bit of money from people that have saving accounts with them, right? Give that to me, and then they're just going to pay them back once they make their interest payment. You know what I'm saying? The bank going to make money. Everybody's going to be happy. Nobody knows that anything's missing. Okay? So, it says financial institutions are able to pool the savings of money of individuals in order to make loans to borrowers. So, we're going to jot that down. Okay? Put down that they pool savings accounts. What do you think I mean by pool? Put them all together. Y'all with me? Pool savings accounts to make loans. And again, guys, I've already explained this to you. They take money from most individuals and help them pay it back. So they pool savings accounts to make loans. And then the last part there, the bank creates money by doing what?
Interest. Or
Yeah, but you're right. They make their money off interest, but how do they create that interest? By doing what with money? By keeping it or giving it out to people?
giving it out.
Yeah, by loaning it, right? So banks create money by lending. You guys will notice this. If you ever go into a bank when you get older one of these days, you tell somebody you need to borrow money, 15 people is going to be trying to help you. Because they know if you're going to borrow it, that once they run all your stuff, if you're going to pay them back and you meet all the criteria and they loan it out, they've made money. You know what I mean? So they're going to want you to borrow money. Okay? And then lastly, and we'll be done, write down the government role in all this. Obviously, the government has a say-so in our financial institution. Government's role. What type of role do they play? Pretty simple, actually. All we're going to put down is they protect consumers. Okay, how are they protecting consumers? Put down that they regulate and they enforce. They regulate and enforce laws. Okay? And how do they do that? Through the Federal Reserve? And I'll explain all this after we write it down. And the other one says Exchange Commission, but we're not going to put it down. So the government protects consumers by regulating and enforcing laws on how or who can get a loan. Does that make sense? Because look at it like this. If our banks in Carroll County can anybody and everybody go to a bank and get a loan right now? No. You have to meet certain criteria. If you have a horrible credit score, meaning if you've borrowed money before and you've not paid it back, then we don't want you to borrow money, because all you're going to do is take money away from other people. So you got to meet certain criteria in order to borrow money. Because if you don't pay it back, you're not only hurting yourself, who else are you hurting?
Everybody's
The
money
people that you
they got.
took money from through the savings, and you're also hurting the bank, right? So if a bank gives out too many bad loans, they could go under. Y'all see what I'm getting at? So the government sets up protection through regulations of, okay, these people have to meet this criteria, this criteria, this criteria, this criteria. Y'all got me? In order for things to work. Okay? So, now, I know I've thrown a lot of information at you and probably was somewhat confusing to you, but I want to show you my notes and how I set this up, just so you can look at it. Maybe it'll help you. But this is what you should have down, and then we're going to kind of star what we need to know about it, okay? So at the top, I wrote down financial institutions. You need to know what a financial market is, okay? And then what financial institutions do. Let me get a highlighter. That'll probably help better. So, you need to know what a financial market is. Is that showing up there? Oh, yeah. And then you need to know what financial institutions do. They act as intermediaries, okay? They're the middlemen between borrowers and savers. All right? The next thing, obviously know the benefits. What do financial institutions offer that are benefits? Okay? I gave you 4 of them. On your next test or quiz, I may ask you to tell me 3 of them. Casey, all this will be on the Google Drive in about 10 minutes. Okay?
All right.
And then you need to know what types of institutions there are. I have a handout that I'm going to put in the Google Classroom for you guys to try. But know what a bank can do. Credit union. Cash loan stores. Or excuse me, checking and cashing stores. And payday loan stores. Y'all can't even see that in my phone. So that's what we kind of need to do right there. Okay? And we're not going to be done with this by any stretch. We still got a bunch to talk about when it comes to financial institutions, because we're going to break down each one of them individually. But that's kind of the start. Okay? Just kind of have an idea how those work. And then here's the last part that I jotted down. Okay? And the biggest part about this one is the government's role. How do they protect us? Okay? Through regulation and enforcement of laws. Alright? Does anybody have any questions? I know you got questions, but does anybody have any questions as far as the basics right here go? This makes sense? Alright. Well, that's all I've got for today. I'm going to put in the Google Classroom a couple of handouts I want you to try. You have to read something and then figure it out, but that ain't going to be due until like Monday. Okay, so you don't have to worry about it. But I'll get all that set up for you here in a second. So, any questions at all? All right. Well, that's what I got for today. So.